What is going on, viewers? My name is Chuck Butler, and welcome to Stock Recap Friday, where we recap what I did wrong over the week, or what I did right, and what I can do, and what I can do next time to be better. So let's go ahead and review that. Let's go ahead and get with this. I am down 2.55% for the week, which is probably why my mom stopped calling, but we'll recover. We always recover. Yes, we do. Actually, I did recover. Not all of it, but an okay amount that I can be all jippy about for next week. But let's get into it. I took a total of 5 trades this week, which was my mistake. I am only trying to take 3 trades a week. Because that is how that is the criteria for my strategy. Just 3 trades a week in order to get my percent goal. But that did not work out this week, and let me tell you why. First ticker I traded was ticker symbol DGAS. I saw a horizontal. Let's go to the 30-minute. DGAS, if you don't know, it's a 3 times leveraged ETF on natural gas, and it it has an inverse, which is UGAS, and it follows the commodity natural gas. That's /NG right here. I got in on Tuesday because I saw a horizontal pattern. As you can see, it was forming support around 2060, which realistically is where I should have gotten in. Instead, I got in at let me make these charts a little more. Okay, there you go. A lot more cleaner now. This is my swing trading chart. I got in on Tuesday. Let me see. Tuesday, 21st. I got in at 2080 with for the expectation for it to come back to its resistance at 2170 at 2170, but realistically I would have sold like at 2150 or 2160 for a good 3% from 2080 to 2060, a good 3% profit. That would have been golden. But I bought it when it was still on the downtrend. I did not wait for a better confirmation when this ticker reversed, and it also had support at 2040. I realistically should have bought at the support at 2060, but that did not happen. I was uh, um I I was pretty sure of myself that it bounced from the support and it was going to start uptrending. Then it started downtrending for the day, but I didn't get scared out because I knew it had support at 2060 and I wasn't going to lose my mind over it. So I held it until this day, and it was moving so slow, and I was just being impatient because it was Wednesday and I haven't even reached 3% yet, and when I trade these leveraged 3 times ETFs, I know that if you're patient enough, in one day it can cover about 3 to 5%, which is what I look for. But DGAS this week was moving extremely slow, but what I did good on this trade is that I broke it down. I identified the support and resistance, and if I would have just held it throughout the week, I wouldn't have been down. I would have been up through just 3% this week. As you can see, it has reached highs of 2160. But I failed to see the resistance at 21 because I just went over that. I was just looking at the support and resistance from 2060 to 2060 to 2160, and I was disregarding the fact that it could possibly reverse at 21, which it did on Tuesday right here. It reversed and then reversed right here, but it continued to trend back up because this is a weak resistance. This is one of the main resistance points. But yeah, so that's what I did wrong on this trade. If I would have just held it, I would have came up out on top for the week. but I did not. So let's go over to our next ticker symbol here, MU. I believe I got into this one the day I left you guys because I saw a horizontal pattern. Here, let me go to the 4-hour chart. I saw a horizontal pattern from 50 to highs of 55. It also bounced from its support it also bounced from its support around 46, which was also a good um a a good identification that I knew um that my breakdown was good. And realistically, if I was watching this instead of you guys, I should have got in around 48, but instead I got in. Let's see. Let me go to my Robinhood and look at the history. Let's see. Where's MU? Yeah, I got an MU on the 22nd. So let's move to the 22nd. I got in on the break of its resistance, but realistically, what I should have done for a better confirmation is I should have waited for it to either break below it and come back up and hold the possible support at 50 instead of just jumping into it. That was obviously a rookie mistake. And if I was doing my basic swing trading strategy, I would have just held on to this because as you can see, it bounced off of the SMA here, and it wasn't making lower lows. But but today would have been the day to get in because let me see, let's go to the 1 day. It reached new highs, so I would be comfortable with taking that position right now. Possibly at a lower part of the day because I can still see it downtrending, but we want to see it hold 50 and continue the uptrend. But that's going to be for next week. So that was my mistake on that. I got out the next day because it was just I got out next day on the sell-off when realistically I should have just been patient and wait for the uptrend. But the strategy that I'm working with, it requires me to get in and out because I want to switch to more day trading, just the ETFs. But I understand that there are other opportunities such as MU that I'm able to capitalize on, but that obviously did not happen. So my mistake on this one was I was expecting too much for it, like to just cover from 50 from highs of 50 to I just wanted to get about just to 51, 59. I should have expected it to pull back once it broke through the resistance at 50, but I was impatient again, and that obviously didn't work out. So that was what. That is what was wrong with that trade. Then let's see. Let's go to ticker symbol JDST. I could have made out with 3% on this one. I got in on Thursday, and I got in around 83 because I saw that the future that it follows, GC, was just on a continuous downtrend. Here, let me go to the 5-minute. See, 24th. Yeah, see today it just kept just trending down and trending down. So I decided to take a position on JDST to capitalize. I got in at 83 and I rode it all the way up to 86, and that would have been 3%. But I was being greedy because, as you can see, let me back out. There is a horizontal pattern to where it went from lows of 75 to highs of 88, and I wanted the 88, but I should have just I should have realistically just sold it and just locked in the 3%, which was a part of my strategy. It made 3 to 5% in a day. This is what I'm telling you. These uh these ETFs that I trade, they're able to make 3 to 5% in a day if you're patient enough and you take your time to look for the right position during the week. And it did exactly what I wanted to, and I was in, and I didn't sell it. So that was me being not my problem was my problem with this trade is I was greedy. The things I did good was I identified the support and resistance, and I understood the pattern, and it played out perfectly, but I didn't capitalize on it. So this one got away from me too. So I lost on this one. So I lost on JDST, MU, and DGAS. But on Friday I did day trade Gurn. Um, I do day trade from time to time if it does break the whole $1.50 marks. That's the only type of day trades I do. If they can break those, as you can see in the morning, if it broke 5, I would have played that, and then as soon as it broke 550, 550, I would have played that as well. Because usually there tends to be a 20 to 30 cent spike up as soon as it breaks the whole or half dollar mark. But I'll explain that in another video. But yes, I did day traded from. Yeah, let me pull out my Robinhood. History. Let's go to Gurn. I bought in at 10:35 a.m. at 5:05, and then I sold at 5:17. So that was a 5:17, 5:17 with about, I believe it was 100 shares, and I made out with 2.38%. So that was pretty nice. And then I went out of and then I exited out of that. Let's see, at 10:30. Yeah, because it started showing resistance at 5:20, like it couldn't break it. So I decided to get out to collect my profits and get out, and don't be greedy. And then let's go to ticker symbol CRON. CRON was trending up the whole morning, but it didn't hit my scanner until about um 10 a.m. and I did want to get in on a pullback on its uptrend when I saw it at 967, but I told myself it's gonna pull back. It's because it was making the stair stepper pattern of going up, pulling back, going up, pulling back, going up, pulling back, going up, pulling back, going up, pulling back. So I was gonna wait till it pulled back to this EMA line, but but I decided to call my mother for some reason at that point because I think it was something personal. I'm not sure, but I did miss my entry in on this, and I just watched it ride up, not breaking the EMA. I just watched it ride up to 10, and I could have made out on that, but on this dip right here, I got in at 970, and then I sold it at this high of 990 because I saw that it wasn't breaking it, and I made out with, let me see, it was 50 shares, 972. I'm out with another 2% profit, which comes out to 4% profit, and then yeah, so just 4% profit on that trade. On these, on Kron and Gurn, I did not go in with my full account because the the strategy I was working with, it calls for me to only go in my full amount for the only 3 trades, but as you can see, that didn't work this weekend, so I didn't want to risk losing any more, so I just played with half of my account. But yeah, that's the week. Simple mistakes were made. That could have been where uh like JDST, I could have sold here for the 3%, and then I could have played its inverse JNUG this morning. You see this? I could have played it at the break of 8, which is where I usually, the whole and $1/2 marks are the only things I play, and I could have made 7% today. But the reason why I didn't get into the reason why he didn't get into JNUG is because GC has been on. Let me pull up the 4-hour chart. GC has been on nothing but a downtrend this year, but I should have not neglected the fact that it was pushing up, and it pushed up past this trend line that I drew, that it tends to use as resistance. But I was just letting my emotions get over me about how I feel towards JNUG and JDST. I would obviously go for JDST, but JDST was not the ticker that was trending up. So that was my bad, and I could have made my Oh yeah, and then there's my example again. These ETFs, they can cover 3 to 5% in a day if you're patient enough. And what do you know? 7% this day. Then JDST covered. How much did JDST cover this day? Oh look, 7% that day. And you see that's my that is a part of the strategy I want to do. Just focus on waiting patiently and day trading these ETFs, which I will continue to work and tweak on, and hopefully in the future you guys can also um understand this strategy and possibly capitalize off of it. But until then, just keep doing what works for you, and hopefully you stay green. So that would be it for this video. I do have um the equipment and the video editing program I was talking to you guys about. Both are now in my hands, and I am working on that special the new video segment this weekend, so you all can see a face reveal. That's gonna be pretty cool. So I'll see you guys on Stock Talk Sunday. So right now it is 12:41 Central Time. So if you guys are still trading, have a happy trading day. Stay green. Don't get greedy. The lessons for this week is don't be greedy. Don't be greedy and be patient, because first of all, if I would have just waited just until Thursday to trade, I would have made my percent go 7%. But I was just impatient, and I wasn't waiting for the patterns to play out. So my mistakes this week were patience and greed. Hopefully those weren't yours, but if they are, go ahead and work on them, so instead of being consistently red, you can be consistently green. That is it for this video, and peace out.